Let's start with the top line then, that slowdown that you're expecting in terms of IPOs and M&A in the tech space in 2020. What are the reasons behind that?
I think there are various reasons. I think the ongoing trade dispute between China and the US is obviously a key one. There's some general concerns as well about recession approaching. And I think there's also a slight concern about valuations being excessive at the moment, which is putting off a lot of the financial investors as well as some of the strategics as well.
And how does it break down then in terms of Southeast Asia? You say there's a little bit more optimism there. Is that around some of the startup tech companies that are coming to the point where they may be listing? How much are they driving the optimism?
I think the optimism in Southeast Asia is largely driven by the existing unicorns. I mean, the vast majority of funds raised in Southeast Asia in the tech space over the last year or two have been taken up by 4 or 5 of the very big unicorns like Grab, Gojek, Tokopedia in Indonesia, for example. I think there is less comfort, I suppose, about the very early stage companies. I think Series A, Series B round financings are fairly strong. I think it's the Series C, Series D elements of fundraisings between $20 and $100 million that have shown relatively weak growth. So I think the vast majority of the money currently is going to the existing unicorns, but I think we're confident that we'll start seeing more in the venture capital, certainly Series A, Series B, Series financings over the next 12 months.
Jake, are you finding that what is happening then in terms of that financing is happening almost sort of like to the exclusion of other parts of the world? We're seeing, for instance, less flows from China into Southeast Asia. At the same time, Southeast Asia is not really investing into the United States for a variety of different reasons. Can you elaborate on that?
Yeah, of course. I think you're right. There's relatively little outward flow from Asia into the US generally for reasons relating to mostly regulatory hurdles of investing into the US. I think there is a reasonable amount of growth potential intra-Asia. So I think you're right, whilst there's been less investment outbound from China, given the kind of regulatory restrictions on capital coming out of China, there is still a reasonable amount coming out of China. I think Japan is another bright spot as well. I think we're seeing a lot of activity from especially the big Japanese corporates looking to invest into Southeast Asia.
Jake, tell me, when it comes to M&A too, we're seeing quite a rush of it of late. That tends to be late cycle. I won't go there, but how much of it is actually pretty defensive?
I think a reasonable amount. I think if we look at the financial institutions, for example, their investment into tech, it is a defensive move. They see the threat of the disrupting influence of some of the early stage companies, and they're looking to head that off. And I think we're certainly seeing a lot of corporate venture capital from some of the big financial institutions looking to invest and get access to some of that technology as a defensive move. So it's primarily, I think, financial institutions that are looking at opportunities from a defensive perspective.
Jake, there's been a lot of enthusiasm here in China about the opening up of the financial sector. To what extent is that going to provide a catalyst for M&A in this space?
It could well do, and we're already seeing some of the big players like PayPal, for example, looking at an opportunity to get into the digital payment space in China. We're looking at some of the big bulge bracket investment banks looking to increase their stakes in their local domestic Chinese joint ventures. So I do see, interestingly, a fair amount of activity inbound to China over the next 12 months. I think that would be led by the financial services space.
And given the retooling of CFIUS in the US, does that just become a market that now, for the long term, is just far less attractive to many in this region?
Yeah, I think so. I know, obviously, the market is relatively closed to China at the moment for the reasons of the trade war anyway, but CFIUS is obviously an additional hurdle. I think generally there has been more focus in the US on CFIUS, and I think we're seeing, certainly in clients that we're advising, we're seeing more obstacles being put in place as a result of CFIUS, and certainly the number of investments, successful investments into the US is decreasing as a result partly of CFIUS.
Jake, just a final one to end on here for me. Where do you see the most activity in M&A looking into 2020, very quickly?
I think the fintech space, insurtech, I think certainly the financial institutions will be looking for much larger deal sizes and partnerships and joint ventures in those spaces. I think AI is certainly an area that has received a lot of attention in the last 12 months, and I see that continuing as well.